Hello guys and welcome back to the channel. So Tesla has a problem, and this is mostly a problem for shorter term investors. I'm planning to hold stocks when I buy them for 10-20 years, and this doesn't matter so much to me, but I think that this is going to be a lot in the news, and I want you guys to be able to recognize this when you hear it, and I want you to not shit your pants when you hear it, and so you can diamond hand through it, because I think that this is going to create some FUD around the stock, and it's possibly going to make the stock price go lower, which I'm very much looking forward to because I want to build out a very strong position. So the next earnings is going to be crucial, and this video is going to be aimed at telling you what the problem is and what you need to look for in the first earnings call. It's going to be an action-packed video, and all I ask for you is to make sure that you press the like button and you subscribe if you haven't yet. So what does the problem come from? So Tesla reported record deliveries, 440,000 cars produced and 422,000 delivered. And we know that this is a record. However, this is only a 4.3% increase quarter over quarter compared to Q4. And this is going to be very important. So Tesla has been a bit misleading, I don't think on purpose, but I definitely fell into this camp, and that is that they have been telling you that they are going to grow 50% year over year in the foreseeable future, many years to come, right? But the problem is they don't specify, even though we know that it implies vehicle deliveries or vehicle production. But somehow we investors automatically think that, okay, then their EPS or earnings per share is also going to grow 50% per year, right? And this is why when Tesla says that they're going to sell 20 million cars by 2030, some people are perplexed because they somehow think that the average sale price of a car is not going to change, and Tesla's current average sale price is around $50,000 for a car, and then they don't think that there's enough money on the planet to sell 20 million $50,000 car. But in January this year, there has been a major change. Tesla announced very, very aggressive price cuts, which has shocked the auto industry. It has shocked everyone. It has shocked even us, even though it's very clear in Tesla's master plan that they're trying to get the cost down and pass it on to customers to accelerate the sustainable future of this planet. It is still very unusual from any car company to do such sharp voluntary price decreases, right? So the first problem bear argument is an idiotic bear argument that is going to come from okay, they increased the sales by 4% but cut prices by 13%. So that is not in balance, and that shows weakness in their pricing power. And I think that this is a completely baloney argument because Tesla literally sells every car that they roll off the factory, and the factories are ramping up. And if they could have ramped faster, then they would have sold more cars. So it had nothing really to do with the price cuts, but something has to do with the price cuts. And let me show you my Tesla valuation model. This is available for my Patreon subscribers. It's $5 a month, and you support the channel. You get direct access to me and direct access to my Palantir and Tesla valuation and other exclusive content. So if you want, you can check it out, or you can just see it here on the screen. And the point is that you can see that I model how many vehicles Tesla is selling year by year. And I was super close in my model. You can see that this is the actual 1.313 million, and I modeled that they would sell 1.310. So I so far did very good in my Tesla model. But there is a problem. This is based on the number of vehicles, and it doesn't take into action the average selling price of the vehicle. And why is that important? Because if you lower the average selling price, you are going to lower the margin. And actually, the stock valuation is not based on how many cars you're selling, it's based on the profit that you're making. And this is where Tesla runs into a short-term problem, and I'm going to mathematically show you why. And again, this is very important for you to understand because I believe this is going to be in the news a lot. So this is Tesla's Q4 report. I'm going to make my head very, very small so that you can see. And here is where I'm going to illustrate the problem. So they had an automotive revenue of 21 billion in Q4 2022. Let me make this bigger for you if I can. No, I cannot. Okay, good. So anyway, so they had 21.3 billion revenue with a 25% gross profit margin, and this gave them an operating margin of 16%. And here's the very, very important thing: a GAAP net income of $3.6 billion. But because they only increased 4%, with a 13% price cut, we know that this number is going to go lower. So this is going to show a decrease. Maybe it's going to be 19 billion, 20 billion. It doesn't really matter, but it's going to be a decrease even though they had highest ever sales, right? And the big question is, how much is this automotive gross margin being hurt? And this is a very, very big question. Probably it's going to be hurt most in Q1. If you listen to the earnings call, Zach Kirkhorn did say that they're expecting the gross margins to be over 20%. I reckon that they mean that for the whole year. And as they're scaling up, it's going to be, you know, the worst when the scale is less. And as the scale goes up, it's going to be better. But this is going to also significantly hurt the profit, because if you have a less income and a less gross profit, that means that you're going to have a less profit here. And again, the valuation is based on the profit. So you're going to have a growth company where the profit is going down. And here is the big question, which we need to wait for the Q1 earnings call to be answered. You can see that in 2022, the total profit of the company, the GAAP profit, was $12 billion. So if you divide that over 4 quarters, it's 4.1 billion on average per quarter, right? But we know that Tesla is going to have a less GAAP profit than 3-point-something billion. Sorry, what is wrong with my math? So it's 3.1 billion per quarter. So we know that it's going to be, I think it's going to be around 3.1. Another major question mark here is how much of their cash that they have a boatload of cash, right? How much of that did they turn into short-term treasuries, which are yielding almost 5% now? If they did 10 billion, then this year they're going to make 500 million in interest income, which is about 125 million per quarter. So that is a nice addition to their profitability. So let's say that in Q1 they're going to do 3.1 billion. And then they ramp up the production, and let's say that their average is going to be 4 billion. I think that that might be a bit highly calculated. But if their average is 4 billion, then this year they're going to have 16 billion earnings, right? And again, if you go down, you can see that Tesla, this is Tesla's GAAP earnings. In 2018, they lost $1 billion. In 2019, again, almost $1 billion. In 2020, they made 721 million. And they had a huge growth to 5.5 billion in 2021. And this year they also had a huge growth, but it wasn't a 6x growth, it was only 128%. And if they grow in 2023 to 16 billion, then that growth is going to be only 28%, which is a major, major slowdown. And I might have been optimistic. Again, if it comes out that they only made $3 billion and, you know, they're expecting certain headwinds, so maybe they're going to be flat on their earnings. And how do you justify a growth stock that is not growing profit in the short term? So this is, I think, going to lead to super many negative articles. It's going to create a lot of FUD, and I think that stupid investors who cannot think are going to sell a lot of Tesla stock to you and me, who are there to build out massive, massive positions in the future. I do believe that in 2024 and in 2025, by the way, also this year they're going to ramp the Cybertruck, which is going to hurt their profitability. So there is a chance that, I think it's a low chance that they don't grow profit this year. I think that it's going to be around a 20% growth, and that is bad, right? But when Cybertruck is ramping in 2024, and as they get more and more FSD income, the profit margins are going to go back up. And as Tesla, makes more cars and introduces more cars, it's going to take care of itself in the future. This is why it's so much easier to be a long-term investor, because all these short-term headwinds and changes, it doesn't do anything. It just give you basically buying opportunities. So be prepared for super many negative articles. Be prepared to see a lot of Gordon Johnson reaction videos from me. Have your diamond hands ready. Keep your investor hat on. Think above all else, and don't do anything stupid when it comes to Tesla. So let me know what you thought about this video. Let me know if you agree with what I'm saying. I can't wait for the Q1 earnings, which of course I'm going to cover on this channel to see how much they have been hit, and I'm going to do a full video how I update my Tesla valuation, which is going to be available on Patreon. Anyways, thank you so much for watching. Please make sure you subscribe, and I'll see you in the next video. And happy Easter, by the way. Ciao, ciao.